Good morning. It's Wednesday, the 15th of May, and this is Govindraj Ethiraj broadcasting and streaming from and headquartered in Mumbai, India's financial capital. Our top stories and themes for the day. Peace returns to Dalal Street for now. How long will it stay? Wholesale inflation is at a 13-month high in India. Forget diamonds. It's all about copper now. How rising demand is triggering massive shifts in the mining industry. In India's pharmaceutical industry, there are no friends and there are no enemies either. Find out how. How auto giant Ford is now losing $100,000 per electric car sold. And how China's international air traffic is still 70% of pre-pandemic peaks.
This is a core report with Govindraj Ethiraj.
Peace returns to Dalal Street. 4 phases of elections of a total of 7 in India's general elections have ended. There are 3 more to go, but it's safe to say that the trends are somewhat clear, at least to those who are vested in the outcomes, since results of several privately commissioned large or small exit polls must be in. Perhaps that's the reason the BJP, widely expected to win the elections with a strong majority, is no longer displaying the jitters that it did in earlier weeks. And the present approach seems to have swung almost to the other direction, with the Home Minister and the Minister of External Affairs, who both have nothing to do with finance on paper, are now talking up the stock market. Now, talking up the stock market in itself is not the best thing to do, I feel, because markets usually do best and consistently so when they're not actively talked up by politicians and rise up steadily and precisely as they have been in recent years. But the government, to its credit, has largely refrained from talking to and up the market in all these years. Back to the present, the stock markets rose for a third day on Tuesday thanks to auto, banks and metal stocks, and more on metals shortly. The BSE Sensex closed 328 points higher at 73,105, while the Nifty 50 ended at 22,218, up 114 points. The broader markets were strong too, with the BSE Mid Cap and the BSE Small Cap rising between 1.1 and 1.8%. Reuters said volatility in Indian markets, which rose for 13 straight sessions on concerns over election results and sustained foreign selling, eased on the day, that's Tuesday, but was still near 19-month high levels hit in the previous session. While the Indian markets seem to be recovering from their jitteriness for now, a quick reminder that world markets are still strong, close to record highs ahead of US inflation data, among other factors. The benchmark 10-year US Treasury yield was last at about 4.47%, flat on the day, that's on Tuesday, down from mid-April's 5-month high of 4.73%. We're talking about the United States Treasury yields. And all of this is still sharply up from the 3.8% at which it started the year. Reuters reported a survey released on Monday by the New York Fed showing that Americans are seeing inflation a year from now at 3.3%, which is higher than they did a month earlier. And then back on the markets, some small company news. The new thrust on energy and sustainability and similar moves among peers has likely triggered the German-owned Siemens in India to demerge its energy business into a separate legal and listed entity called Siemens Energy India Limited. Siemens Energy India will focus on being an energy technology company, supporting customers in transitioning to a more sustainable world, the company said. The key word, of course, is sustainable and then sustainability. Wholesale inflation is rising. India's wholesale price inflation, as measured by the Wholesale Price Index or WPI, rose sharply to a 13-month high in April to 1.26, thanks mainly to food and primary articles. Now, the April figures were higher than the 1% rise expected by economists polled by Reuters and up from the 0.53% year-on-year rise in March. Now, all these figures appear small, but then the context is coming up. WPI-based inflation remained in positive territory for the 6th consecutive month, that's now, but it was in the deflationary zone for the majority of the previous financial year. And I repeat, it was in the deflationary zone for most of last year. So the data released by the Ministry of Commerce and Industry on Tuesday showed that the uptick in factory gate inflation during April was driven primarily by a spike in prices of food articles and fuel, among other things. And food is something that's driving up consumer price inflation as well, particularly vegetables, as we've discussed yesterday. Care Ratings economists told Business Standard, although the outlook for food inflation has brightened thanks to an anticipation of a normal monsoon, which is expected to boost agriculture production, monitoring the monsoon's temporal and spatial distribution remains critical, which means that we have to see where it rains and how it rains before concluding whether the rains were good. It's all about copper. Copper is hot. Not only are prices high and new uses for it are kicking up demand, but the increased demand present and perceived is leading to major shifts among global mining giants and trading companies. The Wall Street Journal reports that after a top copper producer recently hit a financial crunch, the Biden administration started huddling with potential investors about taking a stake in the company's Zambian mines worth around $3 billion. And there are other countries also lining up, including the United Arab Emirates, Japan, and Saudi Arabia, all viewed as friendly to US interests, expressing interest in the stake in First Quantum Minerals Assets being the name of the company. The larger goal here, says the Wall Street Journal, is to keep it out of Chinese hands. Meanwhile, BHP Group's record nearly $43 billion takeover bid for Anglo American, which was rejected on Monday, also puts, as we've been discussing on the core report, a fresh spotlight on this metal. Meanwhile, while London-listed Anglo American, which produces a range of commodities from diamonds to nickel, Australia's BHP has made it clear that it most prizes the company's copper assets. Nevertheless, Anglo American will exit diamond, platinum, and coal mining in a massive restructuring designed to fend off that $43 billion takeover approach from BHP and turn itself into a copper giant. So, copper again. But you will be surprised to hear what is Anglo giving up. Anglo said it plans to demerge or sell its De Beers diamond business. Remember, diamonds are forever or clearly not. And separate its Anglo-American Platinum Limited unit and sell its coking coal mines in Australia. It would also slow spending on a giant fertilizer mine in England. So it's back to copper and iron, of course. And more of this, of course, in subsequent episodes. How in India's pharmaceutical industry, there are no enemies and friends either. So there are more than 1,000 active pharmaceutical sales and marketing companies and players in India, though 35 players contribute to almost 80% of this industry. So smaller players focus on niche therapies, specialties, or geographies to make it big and then try and spread their wings at a pan-India level. The interesting thing is that the pharmaceutical market is constantly buzzing with activity where major pharma companies seem to be hunting for products and brands to either buy or distribute and tie up and then manufacture. And similarly, smaller companies are also actively hunting for larger organizations or specialist organizations they can partner with. Now, none of this is really new, but it has surely picked up pace in recent years and maybe months, according to a new report from Pharmarack Technologies, a pharma industry research firm, and authored by its vice president, Sheetal Sapale. One reason for brands getting shopped around is because many multinational companies like Novartis have steadily reduced their exposure in recent years in Indian market and switched to marketing alliances with domestic majors. But more than that, there is a realignment in the market between who will produce and sell versus those who will perhaps create and then quickly start looking for larger organizations to partner, distribute, and thus grow faster. In the context of a growing pharmaceutical market like India, this is interesting because we don't see something like this, which is active asset management, for lack of any other term, at this scale and this intensity in any other industry. Let me take some examples. Take a company like Torrent, which acquired Elder Pharma in 2013 for about 2,000 crore rupees. Since then, it's been acquiring, co-marketing or hosting brands from Novartis, MSD, Unichem, and Glenmark. So note that the alliances for all companies are all of all kinds, which is in-border and cross-border, within the country and outside the country, or rather with companies who are multinationals. Similarly, Dr. Reddy's may have done now a dozen significant deals in the last decade, including partnering with brands like Pfizer, Boehringer, Ingelheim, among others. It also bought Wockhart's 62 brands and a plant a few years ago. Apart from licensing brands like, let's say, Remdesivir, remember from the COVID days, from Gilead, and working with Novartis and distributing Sanofi vaccines across India. Sun Pharmaceuticals, which merged a decade ago with Ranbaxy, similarly has distribution with AstraZeneca, Zydus, and Bayer, among others. So like I said, there's a push and a pull. Cipla, for instance, works with Boehringer Ingelheim again, Roche, Sanofi, and Eli Lilly. So I do use the term works loosely here because the relationships are specific and can differ from product to product and company to company. So I spoke with Sheetal Sapale at Pharmarack, and I began by asking her what was driving this new trend of partnerships and alliances.
The reason for partnerships today is the hunger for growth. Indian pharma market today is a very attractive segment. If you see how the population or how the demographics of the country is evolving, we have a good amount of younger population. The affordability is on a higher side. If you look at the disease profile, it is going more towards the lifestyle diseases, and people are willing to spend on treatment. All these parameters combined make this market a very attractive market. But as you know, there are many avenues of growth. The companies can't grow as as a solo company. If you partner with good partner, probably the milestone that you can achieve 10 years down the line, you can achieve within 1 or 2 years time. That's the reason why there is a need to partner. Also, when it comes to pharma industry, there is a lot of investment that needs to go into manufacturing, research and development, training of manpower, whether in the marketing team or the field force. A lot of investment goes in. A partner may already have these resources ready with them. So a partnership actually prevents your efforts even in this area.
I'm going to ask you questions from both sides, which is the smaller company side as well as the larger company. Give us a couple of examples that illustrate this trend well.
Okay, if I were to I'll just take one example where acquisitions have helped a lot, and one example where divestments made a lot of sense. So if I were to take example of a company like Torrent Pharma Company, it acquired Shelcal brand from Elder, a Registron from Novartis, Unienzyme, Empoxin from Unichem. If you see, Elder actually had financial problems, but it had got a very strong established brand, Shelcal. So financial troubles of Elder were taken care of. At the same time, Torrent became a very strong player in the gynec and the ortho segment because of Shelcal. Similarly, in the gynec segment, Novartis's Registron brand also has a good name as far as the gynec portfolio is concerned. Gastro segment, Unichem has a strong brand, Unienzyme, which has got, again, not just a prescription component, it has got a OTC, OTX component as well. So Torrent strengthened its presence over here. Then Torrent has also partnered with remagliflozin, which is a oral antidiabetic molecule from Glenmark. Now here it was more of a co-marketing sort of effort. So Torrent got a ready-made research molecule for establishing its presence in the diabetes segment. Also, Glenmark benefited because certain milestones were there and there was a sort of fees that Glenmark could charge from Torrent for the sales done. Similarly, there are a lot of MNC companies with whom Torrent has partnered, like MSD, Eli Lilly, Pfizer. Now, MSD had its molecule Molnupiravir, Eli Lilly had its molecule Baricitinib, and Pfizer its brand Paxlovid. All of these molecules were launched in the country during COVID times. What advantage Torrent got is research molecules with a lot of scientific studies and coming to the market for the first time, the first mover advantage with well-researched molecules and available to the market immediately because the patient population was there and the time was right. At the same time, what did these MNCs gain is they had a partner who was reliable, the name was known, they had the reach and they had the image. So their molecules, research molecules, could enter the country faster. Certain molecules which were probably not non-COVID, but then partnership with Boehringer of Torrent, wherein, they had the molecule empagliflozin, which is again a patented molecule. It is still under patent protection, but then partnering with this Boehringer for marketing this brand in the country also gave it advantage with the anti-diabetes, in the anti-diabetes segment because, again, these are premium molecules. Torrent also partnered with a company like Curatio, where they picked up the entire derma segment. So acquiring the entire derma segment also gave it a strong position. So this is an example where a pharma company acquired a lot of brands and started, either it is acquiring a lot of brands or division or the entire company and strengthening its presence.
No, so when it comes to partnerships, and usually a partnership would mean that, let's say, a younger company does not want to necessarily sell out and stay in the game. And that's why you go and partner with someone else. So my question there is, are these newer companies who are entrepreneurial companies who don't obviously want to spend too much time or see the advantage of partnering with someone big? Or are these typically older companies who've been around and therefore now realize that they're better off partnering with a larger company in India?
It is both ways. Sometimes it is the older companies whose interests have shifted. Probably they don't want to operate in the Indian market and they want to focus only in the global markets. That's the reason why they want to give away. Even the Indian companies. So, they are not interested more in the India business. They want to focus more in the global business. That's one. And second, some companies which are startups, a startup like Openet. Openet is a startup company. In a very brief period of time, they established themselves in the derma segment, and then at a good valuation, the company was acquired by Eris. So the objective is also to get acquired by a bigger company for a good valuation.
But are you seeing more of partnerships or are you seeing more of such outright acquisitions, whether of the brand or the company?
I would say both. Outright acquisitions, usually people don't or companies don't give away their brands easily unless and until they have lost their interest in that therapy altogether. Because when I have a brand for a particular therapy, I keep on developing relationship with a doctor or a specialty which is important to that therapy. If my interest in that therapy goes away altogether, only then I will give away my brand. So I will not give up a brand so easily. But then, yes, partnerships are there. Now, partnerships also happen not in acquiring a brand or marketing a brand. Partnerships also happen for getting manufacturing rights of the brand. Or sometimes in certain companies, for example, Unichem with Torrent, it is not just getting the brand, but you also get the entire manufacturing plant. So the plant also becomes your plant. And then a lot of resources which would otherwise be required for establishing a plant in a particular area like Baddi or Sikkim, it becomes very easy for you.
Sheetal, so the question is, if you were to take a step back now, would you say that the Indian pharmaceutical market is very dynamic and growing, and therefore we are seeing all of these activities from partnerships to acquisitions of companies, brands, and so on? Or is it that the market is consolidating and there is only place for a few players, and therefore that's driving all of this?
I wouldn't say the market is consolidating, but I would say the market is growing at a very fast pace. And just to meet up this pace and make the most of the opportunities that have come up, people have to partner.
So, in the partnerships that you've talked about, what or which of these partnerships, in whichever way it finally emerged, was the most unusual to you?
Actually, partnerships in the areas of operational partnerships where there is something called as partnerships for research of certain molecules. Well, both the partners can share the rights of selling them. Is something was little unusual, but looking at today's scenario, even if you were to do something called as research and development, there are certain resources that are needed, which one company may not have. But if both the companies come together and gather their strengths together, that may be possible. So that was one unusual partnership that I have found. But otherwise, most of them, we learn about them and then we realize this company is not the only one who does it, or many of them do.
Sheetal, thank you so much for joining me.
Thank you so much.
More trouble for EV makers. Ford Motor Company has begun cutting orders from battery suppliers to stem growing losses in electric vehicles, according to Bloomberg, which reported that Ford is also throttling back ambitions in a rapidly decelerating market for plug-in models. As EV prices have plunged and demand has slackened, Ford's losses per EV have now exceeded $100,000 in the first quarter, more than double the deficit from last year, according to Bloomberg's calculations. So the larger move is part of a retrenchment of Ford's EV strategy, which includes reducing spending by $12 billion on battery-powered models, delaying new EVs, cutting prices, and postponing and shrinking planned battery plants, says Bloomberg. Ford has forecast EV losses of up to about $5.5 billion this year, and its CEO said that its EV unit, that's Model E, is the main drag on the whole company right now. Now, here is the interesting part. Automakers in the United States are seeing EV demand, as we said, slide, even as battery makers in South Korea and China are dealing with a backlog of unsold inventory. And this goes further. This in turn is impacting prices for key metals like lithium, cobalt, and nickel, all of which are now traded at multi-year lows right now, stalling investment decisions on new projects and in some cases leading to mine closures. So all of this, good news or bad news? Well, you decide. China is still seeing low air traffic levels. Qantas Airways said on Tuesday it will suspend flights to Shanghai starting on July 28th, citing low demand 9 months after it resumed post-pandemic services from Sydney, according to Reuters. So the interesting number is this. International flight numbers to and from China are about 70% of pre-pandemic levels and have been slower to recover than in other markets because of fewer tourists and a domestic economic slowdown. So while this is a Qantas move, obviously many other airlines are also affected. China's aviation regulator has said that it expects international flights to return to 80% of pre-COVID levels by the end of 2024. That's the end of this year. In many other markets, including India, of course, we are seeing air traffic now crossing pre-pandemic peaks. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.